Hello, and welcome to another edition of BeaverFinance. I'm your host, Robert T. Anderson. In today's series, we're here to talk about RRSPs. What is an RRSP? It's a registered retirement savings plan. This is another type of registered savings account. In previous videos, we've talked about TFSAs, which is a tax-free savings account, and also an RESP, which is a registered education savings plan. These are all examples of registered accounts. Next, an RRSP is a plan that allows you to save for retirement. It's great to go alongside a TFSA, helping you to complement your Canada pension plan that you can expect to provide you an income in retirement, as well as old age security, as long as you qualify, and perhaps a pension or other investments that you may use to provide income in retirement. Now, contributions are tax deductible up to a limit. For example, you may contribute 18% of your earned income up to a maximum, and this maximum was just announced for 2021 of $27,830. Now, it is important that you're looking at your earned income. So if you are a business owner and you take any dividends out of your corporation, that will not qualify for RSP limit. So it is important from a tax planning and retirement planning standpoint is to consider your options. Also, when we look at tax deductions, when making your contribution to the RRSP, an example that we normally look at is, let's say your income is $50,000 and you contribute $1,000 that year to your RSP. How it works is you contribute that $1,000, you get an RRSP tax receipt, you file that receipt with your tax return, and now instead of being taxed on $50,000 of earned income, you're now taxed at $49,000 in income. So if you've paid tax throughout the year, which most do through payroll deductions, you're more likely to receive a tax refund, and that refund can be calculated based on your marginal tax rate. Next is an RRSP allows for tax-deferred growth. Now, this is only until you withdraw it. So it's a little different from a tax-free savings account that we talked about before. So any dividends, interest, or capital gains that are earned in your RSP throughout many years will not be taxed on an annual basis within the account. So what happens is if you withdraw from the RSP, you are then taking that amount as income. So in our previous example, where you earned $50,000 and you put away $1,000 into the RSP and you were taxed at $49,000, now if you withdraw from your RSP, it's the reverse effect. So you're now going to be taxed on $51,000. In that example. So if you have a long way to retirement, say 20 or 30 years, being able to contribute to that RSP and then further investing that tax return that it generates can get you further ahead when it comes to retirement planning and growing your assets. And then you just have to be mindful of withdrawals and your taxable income in retirement. So that'll be something we'll talk about in a future video, our registered retirement income funds, or RRIFs. And lastly, you can choose your investments from a wide range of options. This is just like the tax-free savings account. You can hold mutual funds. You can hold ETFs or exchange-traded funds. Of course, stocks, bonds, and also segregated funds, which we'll talk about more of these in future videos. Now, I do have one bonus tip for you. As you build up your retirement portfolio, you may be looking at various U.S. Equity investments. So these could be U.S. stocks or U.S. ETFs or U.S.-based mutual funds. So these investments, when you're looking at your overall asset mix, you'll want to consider holding those in your RSP instead of your tax-free savings account or instead of your non-registered account. Now, there's other factors, of course, to look at. However, an RSP is a recognized retirement savings plan with the U.S. In terms of our tax treaties. So if you earn any U.S. dividends, if that's your strategy, you'll want to hold those in your RSP because if you don't, there is a foreign withholding tax for Canadian residents holding U.S. investments. So definitely something to consider. If you're just starting out, I wouldn't say it's a big deal, but definitely good to know. So thanks again for listening. Please check out our other videos. We have videos on TFSAs, RESPs, and we'll be having future videos come out shortly. So please do subscribe, follow us, comment, tell us what's your experience been with RSPs, what's your strategy. Comment below, and we look forward to hearing from you. Thanks again. Bye.